We do have Bob Iger, the chairman, the president, CEO of Walt Disney Company. One of the less credentials he has is he was my boss for some time. So, Bob, welcome back to Bloomberg. Good to have you here.
Thank you, David.
So, as we just said, you've got your earnings out, and what I took at least away from it is that you exceeded the expectations with respect to profitability, earnings per share, exceeded them by a good margin. Fell a little short of what was expected on the revenues. We can talk about that, but let's start with where you really had the beat on the earnings. It looks to me like it's a story of the theme parks and the studios. Is that the story from where you sit?
It is the story from where I sit for the quarter that we just announced, yes. Both of those units were up 20%, 21%. Parks and resorts up 20%, studio up 21%. The result of a continued trend in the marketplace that is quite positive, certainly tourism visitation to our parks, not just in the U.S., but across the globe, and the fact that the product we have in the marketplace is working. And of course, on the studio front, is the result of years of smart investment, the acquisitions that we made of Marvel, Pixar, and Lucasfilm, certainly part of that, but also fantastic execution by a first-rate team across the board.
On the theme park subject, how sensitive is your business to consumer spending? Because that's something we watch at Bloomberg pretty carefully, and there's been a little bit of softness in the last week or two. How sensitive is your business to that?
Well, clearly a healthy consumer is good for the Walt Disney Company's theme park business, but the vacations and the experience that we offer are extremely unique. Something that consumers, covet. In some cases, they save up for a long period of time, or as part of a long-term planning in their lives, whether for vacation or celebrating something else in their lives. And so they tend to sacrifice that less than sometimes other things. But we also rely on consumers not just from the United States, but from across the globe. And we rely on the intellectual property and the storytelling that we create as a company, too. And so there's a lot in those parks that leverages the great storytelling of the studio, for instance, and remains in demand even when times are a little bit more difficult economically.
So Shanghai is something that is near and dear to your heart. That was a big long-term project you worked on personally for a long time. Mm-hmm. I understand it's now profitable already. It's exceeding your expectations, you've said. I know you. I've seen you do this. You always expand something that's working. I know there are already some plans to expand Shanghai. Are you doubling down on that, or are you thinking about additional parks in China?
Well, first of all, yes, this was a particularly important project for me. I worked on it for over 17 years, and I'm extremely proud of what our team ultimately designed and created. But I'm also very proud of how it's been operated over the first year, and proud of how the Chinese people have taken to it. So we're probably just a few days away from hitting 10 million in attendance. It had been our target to hit 10 million in attendance for the first year. We celebrate a first-year anniversary in mid-June, so we're running ahead of where we actually had hoped we would be. About 2/3 of the attendance is from outside the Shanghai area. That's very, very interesting, because it suggests that this is a national destination, which frankly we didn't expect. I think we thought about this time that about 2/3 of the attendance would be from within the Shanghai region, and the opposite has been the case. So that's very, very encouraging. We have a piece of land that is very large in terms of not only the size, but the ability to build it out, and a willing partner to enable us to do that. We announced expansion actually before we opened, and so we're building a large Toy Story land as we speak. We've not announced a specific date for it, but it's already under construction. And we believe that given the success of this business already, and given the size of the land and the interest of our partners to continue to invest in it, that you will see substantial expansion of this particular facility over the next 5 to 10 years. And that, I think, is very, very encouraging. We've always believed that there are other opportunities in China, but our first priority has been to open this one and to do it right. And since it's less than a year old, it would be premature for us to speculate about anything more that we might be doing in another market in China, but we certainly hope at some point that that opportunity presents itself.
So we have theme parks and studio, big upside. Let's talk about some of the things that some people at least feel disappointed about, and that's ESPN. Now, it's been almost 2 years ago now that you said this would be coming. Trees don't grow to the sky. There would be some tapering off in ESPN growth. That's happening now. You've also said on our program, actually, that the digital alternatives, the mobile experience, would replace that over time. Do you have a time horizon about when that will take place, when you'll be making enough of these alternative revenue sources to make up for what you're losing on the basic cable?
No, well, you're right to point out that we were candid about this a few years ago. Frankly, I think more is being made of this than it deserves. ESPN is still a very, very healthy, very, very profitable business, one of our most profitable businesses. It has a stable of live sports that it is licensed for a long period of time that is going to serve it extremely well, that is serving it well today on its traditional platform, that is starting to serve it well on new platforms, and that will serve it well for the foreseeable future. It is a product that is in demand. And the fact that there is still a lot of competition for live sports rights, I think, only points out just how valuable this product is. And no one's got more of it than ESPN. What's happening is exactly what we thought would happen, and that is that there is a decrease in the number of expanded basic subs on traditional platforms. That's happened for a few reasons. The expanded basic product is relatively certainly more expensive than some of the products that have launched on the new platforms, and has more channels than many people believe they need. It still dominates, by the way, the business. More people are expanded basic subs than anything else, but it's definitely decreasing, and we're starting to see some share shift from that, the large bundle, so we should call it, at a price that is typically in excess of $100, to smaller bundles that are launching on mostly new platforms, over-the-top, digital-only platforms, in some cases platforms that are very mobile-friendly and very, very user-friendly. And that's attractive certainly to younger people, not just because of the cost, but because of the usability factor. And that bodes well for us. We're seeing some nice growth, but some of these platforms are brand new. YouTube just launched theirs a month ago, and Hulu just launched theirs this week. And so it's still too soon to say, when lines will cross, or when that will, I'll say, pick up the slack that has been created by some sub losses on the other side. But we're encouraged by the signs that we see. We believe we've got great product to offer. The distributors know that live sports is imperative for them to succeed in that space, and that's why they're negotiating deals that have ESPN on all of their subs. This is only the beginning, and it will continue. And frankly, we're feeling very optimistic about it. I think the reaction to it suggests otherwise, but that's not the case with us, and we've taken a number of steps to contend with exactly what we're seeing. This is not something that we're just getting to. It's something we've been working on for a few years. And I think it's high time that people start looking at ESPN in a very positive way and not a negative way. Think about how mobile devices are being used and what for, for instance. That live sports window, or that player that has live sports on it, is very valuable when you're sitting with a smartphone or a tablet or a laptop, whether you're in your office or in a bus or wherever. And I just think that the pessimism about ESPN is highly exaggerated.
Okay, Bob, thank you very much. I'm sorry we're running out of time. I've got a lot more questions, but I really appreciate you taking the time to be with us.